Lithium, lithium, lithium. The electric vehicle battery materials sector has been attracting a lot of attention over this past period. From increasing demand to supply shortages to a range of different news flow and announcements on a company specific front. There's been a lot to discuss, both for lithium as well as the broader EV battery supply chain. Today, I thought it made sense for us to take a bit of a point in time look at the market, have a bit of an overview into all of the recent news flow and announcements, and provide a wrap-up of some of the key pieces of news that have come out about the lithium sector over this past period. There's been a lot happening. I think first and foremost, when we're thinking about the current lay of the land, as we all know, lithium prices have continued higher and higher over this past 18 months or so. It's been quite incredible to see the rapid ascent of the prices themselves. And in fact, over this more micro past 2 to 3 month period, we've seen, of course, the markets have a broad-based correction across many of the leading indices around the world. But we've seen commodities as well as energy be resilient in the face of all of that. We, of course, know there's disruptions to supply chains for the commodities. We know there's still uncertainty about everything else that's playing out on that front. There was an interesting bit of news that came out over this past week that actually stated that the LME, the London Metal Exchange, is experiencing record lows in terms of their inventory and stockpiling of metals. Now, this isn't specifically directed towards lithium, but it gives a bit of an insight into the broader lay of the land and how things are currently playing out on the supply front itself. And so for the first piece of news, where else would we start than with the ever mercurial Elon Musk? Of course, Musk has helped to pioneer the electric vehicle transition with his leadership at Tesla, and he was once again in the news over this past period. I'm sure nobody at all is surprised to hear that this story and discussion centers around a tweet. He recently put out a tweet that stated that lithium prices have been going too high, in fact going to insane levels was the phrasing that he used. And he mentioned that Tesla might actually start to consider and investigate going into further upstream, both mining and refining, unless costs can improve. Of course, this is an interesting discussion with a range of different implications for stakeholders within the supply chain. And he also mentioned, in addition to that separately, that he has some cool ideas for sustainable extraction and refinement. And knowing Elon Musk, who prioritizes innovation and, of course, focus on sustainability, especially with all of his work with Tesla, it's going to be very interesting to see how this plays out. As mentioned, there are a range of different ways that this could play out itself. It will be interesting to see how Tesla looks to engage with the supply chain. Do they make acquisitions of early stage projects, of projects already producing or in development? Do they look for joint ventures? Or do they look to just sign more longer term contracts like they have been doing with producers and developers already? Of course, as we are talking about rising costs, it is interesting or worth noting that Tesla have been raising prices fairly consistently over this past period. And what's fascinating about that is, of course, a lot of companies throughout the sectors around the world across a range of different industries are coping with rising cost pressures and rising input prices. But because Tesla have been able to rise prices with, so far, it doesn't look like any reduction in demand. As Elon Musk himself stated, Tesla have not a demand issue, but they're constrained by supply and capacity. It looks like Tesla potentially could be more well insulated to rising costs than some of the other manufacturers. But of course, this is still yet to be seen, so we'll see how this evolves. I'm very keen to know your thoughts on it all too, so drop in a comment below what you've made of this past period for the broader sector, any pieces of news that have attracted your attention, and where do you think things head from here. Of course, a standard discussion. I'm just a bloke on the internet who loves talking about the markets. Nothing we talk about is financial advice. Nothing we discuss is buy recommendation. However, I do hope it's an interesting starting spot for you to do your own research from. And so then on to the lithium demand discussion itself. I'm sure it surprises absolutely no one as we discuss the fact that the electric vehicle adoption and transition is rapidly approaching, and it is in the here and now. We're seeing a lot of focus on it. Of course, there's a lot of investment. There's a lot of discussion about it. More and more players are entering the space. And I think we got some insights both from the broader sector as well as on more of a micro company specific lens too over this past period. We saw with Tesla looking to bring online 2 factories. Of course, they brought on their Berlin Gigafactory, Giga Berlin initially. There's videos of Elon Musk having a bit of a dance at the opening of it. This is fascinating for a range of different reasons. First and foremost, it reduces Tesla's reliance on the broader Asian region in terms of the export of their vehicles. Of course, we know the European Union is one of the fastest growing electric vehicle regions as well. So this will allow them to feed into that supply chain. But then on the other side of the coin, we saw that Tesla also brought online and had an official opening, a big party for the opening of Texas factory. The Cyber Rodeo was what it was called. It was a massive launch party. For a bit of a scale and context, This Gigafactory is one of the largest factories in the world. It is absolutely massive, and you can check out some of the dimensions for that. It's going to be planning to produce both Model 3s and Ys, but eventually the longer term opportunity that they're looking to pursue is to become a main factory for the Tesla Cybertruck and Tesla Semi. But of course, then building on top of all of that, it's not only Tesla. Tesla were one of the pioneers in the space, but we see the incumbent OEMs and manufacturers starting to try and join this party now. Of course, we know that the electrification of the fleet is something that's going to be playing out. As we know, the decarbonisation trend and this push towards net zero is growing in importance and in terms of noise. And so there is a significant amount of investment coming in from many of these manufacturers. As you can see from the visual here, it's estimated by S&P Global Market Intelligence that $500 billion worth of investment in the space by 2030. Now, that's not long away. Of course, that's only 8 years away. But you can see from the breadth of some of these companies that are mentioned here, there's going to be a significant amount of investment. And it's also going to be fascinating to see how they can secure the resources and the upstream materials that they need to facilitate, obviously, the downstream sale and manufacture of all of these electric vehicles. And so then I think just spending a little bit of time thinking actually about the supply chain and some of the more upstream factors, we got some interesting insights from a number of nations over this past period. First and foremost, from Canada, you might have seen that there's been a discussion about $2 billion Canadian to be invested to accelerate the production and processing of critical minerals for the EV battery supply chain. Now, it's looking like that this is going to be included in the upcoming federal budget. And of course, the focus, as always, is to ramp up extraction and downstream processing of critical minerals. This really builds on the recent announcement that we had from Joe Biden, who invoked the Defense Production Act to expand the domestic production of certain critical minerals. If you are interested in what this means, why it was so important for the sector, and how things reacted, we'll leave a link up above to this video where we unpacked what Biden's critical minerals announcement was. But for a summary, they've expanded that focus. They're looking to obviously increase domestic production of 5 minerals that they outlined and highlighted: lithium, nickel, cobalt, graphite, and manganese. Many of these I know a lot of you would be familiar with. And of course, the focus, not only in the US, not only in Canada, but from nations around the world, is to localize supply chains, build out resilience in these supply chains. Of course, look to onshore jobs as well, which is going to be fascinating to see how that evolves. And then on to a big piece of news that just came out recently. Lake Resources, an ASX-listed company, ASX LKE, hot on the tails of just recently announcing a non-binding MOU with the Japanese company Hanwha. This morning announced that they've signed a non-binding memorandum of understanding for a lithium offtake with leading global manufacturer Ford. This is for 25,000 tonne per annum combined with Hanwha. If both of these do convert into binding, then this would mean that their allocation for the first stage of their flagship Kachi lithium project would be sold out for that. It sits alongside that recent Hanwha announcement. They've got, it looks like, relatively similar types of announcements. What was fascinating was a little bit of the language that you could pull out from the announcement. Firstly, focusing on this strategic collaboration to develop a clean lithium supply chain. Obviously feeds into the ESG credentials that Lake Resources has. Lake have also highlighted that they believe it helps to de-risk the project, obviously as they move towards DFS and moving towards finalising funding. And it's quite fascinating as well because both of these announcements with Hanwha and Ford highlighted the opportunity to scale up and potentially participate in Lake's other projects. Of course, for stage 1, they've highlighted that the base case will be 50,000 tonne per annum. But what's interesting is Lake have a number of other projects, and they have also recently announced a target 100. They're targeting 100,000 tonne per annum of throughput by 2030. And so it'll be fascinating to see the dynamics of how this plays out and how this evolves moving forward. There is a lot going on, not only in the lithium, but the broader EV battery material space. I'm keen to know your thoughts on it all. Drop in a comment below. If you've enjoyed the video, like, subscribe, turn your bell notifications on. Feel free to share it out. We'll leave links up above as well to some of our other videos. And a big thank you so much for joining us. As you know, not a financial advisor, it's just a general discussion. Hopefully it's been an interesting discussion for you, however. For now, stay well and happy investing.